Well, another Tata Group company which the market would want commentary from is, of course, TCS. The IT major is going to be kicking off the earnings season for the technology sector today. We're expecting dollar revenue growth to come in a little over 3%, somewhere in that 3 to 4% band. But let's get in Reema to understand the nitty-gritties. Reema, what to really understand and expect from the company, and why the big drop in margins this time?
Well, first, let me start with the top line. Remember, TCS had disappointed the street for 6 straight quarters. Then last quarter, the March one, the company reported an inline set of earnings in a seasonally weak quarter. This quarter is a seasonally strong one, which is why the expectations are high. We're working with a dollar revenue growth of 3.8% on a quarter-on-quarter basis. And this would be in line with what we saw last year. Last year's dollar revenue growth was close to about 3.5% in Q1. And in the year prior to that, it was 5.5%. So basically, this is a seasonally strong quarter for the company. With respect to margins, which are expected to drop below 25% and show more than 100 basis points QOQ decline, the key reason is going to be wage hikes, which could shave off about 120 to 130 basis points from the margin. Promotions will impact their margins in the next quarter, but margins will dip below the company's targeted band of 26 to 28%, and that could drive a decline in the company's profitability as well. So profits, according to our poll, will be down close to about 5%. And then in the prior quarter, you also had a very high other income of 905. We'll see if that can sustain. With respect to the positive for TCS, they'd faced headwinds in 3 key areas. One is Diligenta, which is a part of insurance. Secondly, it was in Latin America as well as Japan. All that had impacted the company's growth by more than 100, close to about 150 basis points in the prior year. Those headwinds are now behind the company and could incrementally even contribute to growth. But on the flip side, the company is more than its peers exposed to a potential Brexit fallout, with 13% of its revenues being pound denominated. So Street will watch for commentary on that. And finally, we've not heard more from the management on the Epic case. The last time was in April, just prior to the numbers, when the Wisconsin jury had imposed a $940 million fine on TCS. So that verdict should be out anytime now. Let's see if the management can give us some color on that. With respect to the stock performance, it's been quite flat in the last 3 months. In fact, since the Brexit day on 23rd of June, the stock has corrected close to about 6%. So not going in very robust. The valuations at 18.3 times F5 17 PE are still sector leading.